Looking to hit a record at the end of the week. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, trade progress. The U.S. and China apparently agreed on a framework and a deal was signed. Treasury Secretary Scott Bessent said the administration's trade push could wrap up by Labor Day. And those developments are giving equities a boost. The S&P 500 on the verge of setting a record. We bounced up against it yesterday but couldn't break through. Plus, Nike posts a turnaround that's building momentum. CEO Elliott Hill sees a clear path to recovery ahead. And Katie, I know this is a story you've been watching very closely.
Absolutely. Nike just did it. Let's talk about the shares. Up 11% pre-market, climbing after saying that its years-long sales decline may be finally starting to bottom. They're also taking more steps to mitigate the impact from tariffs. Everything that traders wanted to see, as evidenced by this pre-market surge.
Tariffs could cost Nike $1 billion this year. And Amazon is leading gains among the Magnificent 7 or Magnificent 8 stocks, as Katie likes to call them now, after getting an upgrade to outperform from BNP Paribas Exane. The shares up just 1 1/3%, but cresting $220 in the pre-market. Katie, let's get to the big story.
Let's get to the big story, and that, of course, is trade. We begin with China confirming a trade framework with the United States. Here's what Commerce Secretary Howard Lutnick said on Bloomberg Television.
So the China deal, we inked the deal. You remember we had a trip to Geneva, and then that was being slow played. We got back together in London, and that deal was signed and sealed 2 days ago.
Meanwhile, Treasury Secretary Scott Bessent says the Trump administration's agenda for trade agreements could be wrapped up by Labor Day, which is considerably later than the 9th of July. For the latest, we're joined by Bloomberg's Washington correspondent Tyler Kendall. So, pulling all these threads together, Tyler, are we getting a clearer picture of what the tariffs could look like?
Yeah. Hey, Matt. Good morning. Well, there's a few different things that we have to keep in mind here. One, when it comes to China, it took them a little over 2 weeks just to codify the terms of the talks that took place in London. And as our analysts at Bloomberg Economics say, this isn't necessarily a strategic reset. This is really just a de-escalation here so that they can keep the talks going. Of course, at the center of those talks were allegations by the United States that Beijing had been slow walking these export licenses when it came to rare earth minerals. We did hear from China's Commerce Ministry earlier today that confirmed that they have agreed on these details. They're going to review them going forward, and they're looking forward to the U.S. canceling a series of their own restrictive measures, those export controls that the Commerce Department did put into place to try to spur Beijing along in these talks. So that's China on one end. Then, as you're discussing, we did hear from the Treasury Secretary earlier today putting that September deadline potentially around Labor Day. But what the Commerce Secretary told us yesterday is that they're looking to ink perhaps 10 deals. He called them the 10 top of their class deals. And that could happen still by that July 9th deadline. Though, as you're discussing, we could see that likely pushed back. The last point I will quickly make is that what we've actually heard from both of these officials in the past is that they would potentially use deals in each of these regions, perhaps one in an Asian economy, one in South America, as sort of a template. And that we could see first, and then we could see perhaps that deadline broadened out for some additional ones that would follow those guidelines.
Well, Tyler, I want to go back to China because it's interesting hearing you speak, reading our coverage, and listening, of course, to the administration officials involved. It seems like with China specifically, there's a lot of focus on these non-trade barriers, rare earths, for example, rather than the actual tariff levels themselves.
Right, exactly. And that's something that the administration has really tried to hone in on, though we should say that when we are looking at what a potential broader deal with Beijing would look like, we've heard from the Treasury Secretary Scott Bessent before that perhaps they could use the Phase 1 China trade deal enacted under the first Trump administration as sort of a template when it comes to purchase orders, for example, and boosting U.S. ag exports into China. He's actually previously floated that maybe there'd be some sort of catch-up provision under a new deal in order to hold Beijing accountable accountable to the levels that were initially struck under the Phase 1 agreement. So we're going to have to wait and see how this actually does end up evolving, because at the moment they just got these issues around the critical mineral export licenses done. So we're going to have to see if we can get any sort of more tangible progress here. I'd also quickly leave you with, of course, fentanyl is really at the heart of some of these discussions. About 20% of the tariff that we're currently seeing in place against Beijing is linked to those original fentanyl concerns by this administration. We did see China tighten some of the curbs around the chemicals that go into fentanyl in recent days, perhaps as sort of an olive branch to try to get these conversations going in a more meaningful way.
All right, Tyler, appreciate the update. That is Bloomberg's Tyler Kendall joining us from Washington. Let's turn back to the earnings front and specifically what is going on with Nike this morning. You can see shares now up 10.5% in the pre-market, down 32% through yesterday's close over the past year. But let's talk about what we heard yesterday with Nike predicting that its sales slump has finally bottomed. CEO Elliott Hill saying there is, quote, a clear path to recovery ahead. And joining us with more, I'm pleased to say we have Bloomberg Intelligence senior retail analyst Poonam Goyal. So Poonam, yesterday you told us that we could be seeing the turning point in the turnaround, and taking a look at what we heard last night and the reaction this morning, it seems like it might actually be here.
Yeah, absolutely. Look, the numbers weren't great when you look at them on their own, right? Sales still declined 12%. But what we are seeing is things are starting to get better. The decline is moderating. They're expecting a mid-single digit decline in the first quarter. And that's ahead of analyst expectations. It's much better. And the street's rewarding them for that. And also they're stepping up on their innovation, right? And that's what we wanted to see. The wholesale segment is getting better. The order book is positive, slightly positive for holidays. All good indications that we heard on the call.
What are the most important areas that Nike needs to focus on? Is it just the basic, going back to running shoes and basketball, or is their diversification strategy still really key?
The diversification strategy is absolutely still key, but at the same time, they need to focus back on what's true in retail, the product. The product needs to get better, and they're working on that by introducing more newness into the pipeline, both in wholesale and in their DTC channel. Their DTC channel, notably the online business, will take time, and the key there is the inventory of old product. It needs to come down because that is the channel that they're using to clear most of it. Stores were positive, which is a pleasant surprise to see, and shows that when they have the right product, they're able to sell it. So they're moving in the right direction, but by no means do we see positive sales in the next 6 months from them. It's still going to take time, but we're headed there.
Yeah, some important points there, as you mentioned, that inventory, definitely one of the things that shareholders are rewarding this morning, that clearing underway. And to your last point there, Nike didn't issue full year guidance. Not that it was necessarily expected, but it certainly speaks to what a tough road is still ahead.
Yeah, absolutely right. Anyone issuing full year guidance right now, it's a hard path to follow because we have so much uncertainty coming up over the next 6 months with holiday quarter, consumer sentiment, tariffs, geopolitical issues. There's so much up in the air that I think taking it quarter by quarter is the right move.
All right, Poonam, thanks very much. Poonam Goyal there of Bloomberg Intelligence talking to us about Nike, the stock absolutely crushing it today. It's one we're going to continue to watch. Let's take a look at some of the other stocks moving this hour. We have Bloomberg's cross-asset reporter Nora Melinda here with us on set. Wait, is she a cross-asset reporter?
No, she's equities.
Okay, yeah, there's a difference. They sit in different rows on the
We'll take it. We're friends over here.
Okay, so which are the equities that you're following in the pre-market?
Well, I've got eyes on Estee Lauder this morning. This is a company that was down almost 50% last year, but we're seeing HSBC raising the stock to buy from hold this morning, and that's because they're citing a weakening U.S. dollar. They're seeing American resilience, but also they're talking about stabilization in China. So this should be really good and a potential tailwind for the company as we're looking forward. Shares are up about 5% so far year to date. But I've also got eyes on Boeing. Of course, we know that's a stock that's really been trying to recoup its gains this year. It was upgraded to buy from neutral at Rothschild & Co. Redburn. They're saying that confidence for the company has improved, and the stock is on a transition to a new phase where they actually expect the company to deliver. And it's really been in focus as we've been seeing so many different concerns with the company. So this will really be a welcome shift as we're thinking about that. But lastly, I've got eyes on Core Scientific. Now, this is a data center operator, and this is really in focus this morning because CoreWeave said that it's in discussions, potentially in discussions, to buy the company, and that's according to a report from the Wall Street Journal. But we do know that CoreWeave actually reached out and was trying to make a deal earlier for about $1 billion. So we'll have to see whether or not this one goes through. But we do see shares of Core Scientific down about 12% as of yesterday's close.
Yeah, really interesting there. CoreWeave, one of the shining stars of this recent IPO class, maybe on an acquisition hunt here as well.
When the currency that you basically sold becomes more valuable, you can use it.
Yeah, all right. Great to see you. That is Norma Linda. She is an equities reporter for Bloomberg News. It's a distinction that only that one floor of that side of the building cares
Well, I mean,
about.
it's important because this show is really focused on equities, right? We're beating the drum until the market open. We have 20 minutes to go. Now, ironically, you are a cross-asset reporter.
I am.
But luckily, there's nothing going on cross-asset today. Like oil isn't moving, bonds aren't moving, gold isn't moving, Bitcoin's not moving. It's really all about stocks and the new records that we could see today.
Shall we look at what the S&P 500 is doing pre-market right now? It's only up 0.2%, but that is all you would need for a record close. I believe we closed 0.05% off an all-time high yesterday on the S&P 500. Maybe
we closed at 61.41, and the closing high is 61.44. By the way, we went to 61.45 and change, and the intraday high is 61.47. So we're really bouncing up against that level.
Yeah, let's see if we can get there, because we got a double dose of good news today from economic data, from trade vibes, for example. We'll see if that's enough to get us there. But coming up, we're also on the verge of $4 trillion for Nvidia.
That won't hurt.
We'll discuss the breakout move next. This is Open Interest.
Let's get now to high interest. Look at what's making headlines around the world. Uber is reportedly in talks with founder and former CEO Travis Kalanick to help fund his bid to buy the U.S. arm of Chinese self-driving firm Pony AI. The New York Times is reporting Kalanick is expected to run Pony if the deal is completed, while also leading his current company, Cloud Kitchens. Succession planning at SoftBank. Masayoshi Son says he plans to lead the company for another 10 years, but he has several internal candidates in mind to succeed him as CEO. The candidates work alongside the billionaire every day, but he hasn't disclosed to anyone who they are yet, just that he knows them, which is good. Nvidia is extending gains in pre-market trading after hitting another record high. This is what Katie was talking about right before the break. You can see pre-market shares up 0.5%. This chip maker inching ever closer to becoming the first company to reach $4 trillion in market cap after a plunge earlier this year. Nvidia has overtaken Microsoft as the world's most valuable firm. And I still remember the day that Apple eclipsed $3 trillion in market cap, and Ed Ludlow was talking about it on Bloomberg Tech. So what's really cool is we have Ed from Bloomberg Tech with us now out of San Francisco. Hopefully this happens, Ed, in your show, and then you can be the one to say this is the first company to reach $4 trillion as well.
It would be a big and historic moment in equity markets and in tech if Nvidia hits $4 trillion. It was the first chip maker to hit $1 trillion of value, right? And there's this jostling for position of the world's most valuable company. It's sad, Matt, but I highly doubt that will happen this Friday, right? We closed at $155 a share. We're up 0.6%, half a percentage point in the pre-market. I think the number that we need to hit is just below $164.
You're correct.
Which would be almost a 6% gain. I love Fridays. I love these moments in the market. What it reflects is this bullish sentiment right now that Nvidia's existing dominance in the AI supply chain is going to continue. Whether it happens on this fun Friday, who knows?
Yeah, well, let's talk a little bit about what got us here, because, you know, we're a few weeks removed from earnings. There haven't been any obvious catalysts, Ed, that would be pushing us closer and closer to that elusive $4 trillion figure there. What is the actual driver here? Is it just good vibes?
Yeah, I think since kind of that early point in April, post DeepSeek, where we've rebounded on lows from the S&P 500, and Nvidia itself has kind of had this 60% or so gain, it has been a story about us getting through earnings season, looking at the hyperscalers or cloud computing companies in particular, but also others, because Nvidia's customer base has broadened out, and saying, we believe this long-term story about commitment to spend on AI infrastructure. Nvidia has a near monopoly, right, in that market. You know, the forecast range anywhere from sort of $1 trillion to $3 trillion a year of annual spending for AI. And Nvidia's position currently would mean it would capture a great portion of that. So AI has been the primary growth driver in this equity market in that period. There are still sort of headwinds to Nvidia that it needs to take into account. Principally that the same things that sustain it, the next biggest technology companies, the hyperscalers, are also thinking about how they can maintain this level of spending on the CapEx side, but they're also thinking about doing it more efficiently. And part of that strategy is using their own chips. And so over their shoulder, Nvidia is looking. But look at it creep up. Now, 0.6%. Come on, guys.
Someone's listening.
Manifest it into existence, you know.
I am rooting for you, Ed Ludlow. All it needs to do is get to just under 164. So fingers crossed it does so in your show specifically. That is Bloomberg Tech co-anchor Ed Ludlow. Nvidia shares now up about 15.5% year to date on a total return basis. They've spent a significant portion of this year actually underwater, which we haven't seen in quite a while. But that just speaks to what a rebound we've seen since about mid-April.
By the way, did you see the data trek note today from Nick Collis?
You know, it was the rare one that I missed. What did Nick Collis have to say?
He was saying, like, Lee Iacocca is better than Elon Musk.
Okay.
And both are like key man for their companies, or Lee was for Chrysler at the time. And Ed has a great story out today, or maybe it was last night, on Tesla. Actually, there are other important people at the company. Yeah. And they're starting to leave. Yeah. So I just think it's interesting that Nick publishes that piece on key man risk when, when Ed publishes this piece on Tesla.
We have to have Nick Collis back on the program. It has been too long. A Haverford grad, so, I'm partial to him. And there's a lot to talk about in this market. Not necessarily today. The moves are small, but still looks like we might hit in a record high when we get to that opening bell. The S&P 500 up about 0.2%. The NASDAQ 100 pretty much there. The Russell 2000 also up 0.2%, getting a little bit of a relief from the cross-asset picture with moves muted, which feels like we haven't been able to say for a while.
Yeah, absolutely muted really across the board, no matter which asset class you look at. Coming up, UBS downgrades U.S. equities from attractive to neutral. They're no longer a buy. We'll discuss with Nadia Lovell of UBS Global Wealth next. This is Open Interest.
Bubble risks. Bank of America's Michael Hartnett warns that growing rate cut expectations are fueling an unsustainable surge into stocks. And as the U.S. edges closer to striking key trade deals, his view is that investor concerns are losing sight of the risk from tariffs and geopolitics. Let's discuss now with Nadia Lovell. She is senior U.S. equity strategist at UBS Global Wealth Management. Nadia, great to see you.
Thanks for having me.
So it was interesting to see this note from Bank of America, really striking a bearish tone when it seems like things are pretty good. You think about the good vibes coming from the administration when it comes to all trading partners, but specifically with China. You take a look at this morning's economic data. It seems like inflation is coming down as measured by spending and PCE. Where do you stand right now when it comes to the attractiveness of this U.S. market?
We are now neutral on the market, and we've been so for the last few weeks. I mean, I think most of us can agree that this sharp recovery that we have had, this V-shaped recovery, is pricing in a lot of optimism. And so we think now the risk reward is a bit more balanced. We did participate in the rebound, but moved to a neutral a few weeks ago. Because when you do think about it, some of those risks that you highlighted in terms of around trade, as well as a reconciliation bill, and all of these things have to come to a head at some point. That said, we're not negative on markets. We still think that there's some things to do in the market and there are opportunities in the market. We just wouldn't be chasing at these levels. But I will say we would be buyers if we see any sort of pullback from here.
And we have seen, earnings estimates continue to climb, right? I think earnings estimates for the S&P 500 are at an all-time high now. Valuations are obviously pretty hefty as well. What kind of valuations would you want to put on this market?
I think where you see it right now, 22 times, where, it's a bit stretched, but at the same time, you see the areas that are driving that upward move in valuation has been tech, and these companies are grown into their valuations multiple. We're not looking for much multiple expansion from here, though, but we do expect earnings to really drive growth from here. We are looking for about 6% earnings growth for this year, so 265. I think consensus is right around 264. Next year, the consensus EPS number for S&P seems a little bit high at 300. We think it's probably something around 285 or so, so that needs to come down a bit. But we do think that when you think about where markets can be in a year from now, that there's a bit more of a constructive outlook. We're looking for 6,500 on the S&P 500. Near term, probably more 6,200.
Yeah, it's interesting. Bloomberg Intelligence had a note out this morning noting that EPS has risen more than stock prices for S&P 500 companies. We haven't seen that since 2022, and in general, it's relatively rare to see that. So it seems like, at least on the fundamental basis of corporate America, things look okay.
Things look okay for now, but again, there has to be some catch up from the tariff standpoint. I don't think we've seen that flow through the economy yet. We haven't even seen it flow through inflation yet. We're starting to see some pickup in inflation from some of the scanner data, and we've heard from companies, overnight, including Nike, saying that they do expect to see a hit from tariff later in the year. $1 billion or so hit that can eventually pass through to the consumer. So I think it's the second half of the year that you're going to start to see that drag to earnings. Right now, things look okay, but it's not by any means an all killer.
All right. Go ahead.
Do we not have time? Or?
We have 30 seconds.
Okay, we're gonna keep you here. We're gonna hold you over. I'll hold my question.
I'm an equity person, so you can do that.
Well, this is exactly what I was going to talk about, because you actually previously have focused on fixed income, right?
Yes.
In your former life, you cut your teeth on bonds, let's say. So we'll talk about the marriage between the two when we come back.
Just about 4 minutes to go until the opening bell. Nadia Lovell is sticking with us. We'll be back with all of the opening action up next. This is Open Interest.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller, and we could see a record today. I know I said that yesterday as well, but I did say, look, we have one more day this week to do it. Maybe today will be it. The S&P futures right now up almost 0.2%. And yesterday we were just pushing right up against that record at 61.41, and the closing record is 61.44. The Nasdaq has already hit and achieved an all-time record a couple of times this week. It's up again today, so we could see that again. And small caps are up as well. The Coatue Advisors people ringing the bell at the New York Stock Exchange. They're launching a new ETF, the Physical European Carbon Allowance Trust ETF, which I haven't had time to dig into this yet, but I think it's interesting as all the private jets in the world descend on Venice for the Bezos wedding. It's a fascinating day to launch that ETF. Here is a SPAC at JV SPAC, but you can see they're wearing Hotel 101 jackets at the NASDAQ market site, and the CEO of Hotel 101, with which they are combining, Hannah Lucino, joins us on Wednesday. So if you want to know more about that business, tune in at, will it be like 9:40?
It'll be sometime in the 9 a.m. hour. Or I don't know, actually it might be in the 10 a.m. hour. That's next week's problem.
Yes, well today's help, I guess, is coming partially from Nike.
Let's talk about Nike really ripping from this open. It was up about 10% pre-market, now looking at a gain of more than 13% as those bells officially open the market. Of course, they reported earnings after the close yesterday, predicting that their sales slump has finally bottomed. This would be a big win for new CEO Elliott Hill. His strategic moves seem to be paying off. I will note that Nike was down 32% in the year heading into yesterday's report, taking out a big chunk of that today. You can see gains even accelerating as I talk, Matt.
Yeah, really impressive gains there in those shares. Amazon is leading the gains of the Mag 8 stocks after getting an upgrade from BNP Paribas Exane. As I told you earlier this morning, it's now up 1.7% in the cash trade. The analyst at BNP Paribas sees some margin resilience at Amazon. We've all been so focused on how they pass on tariffs Do they tell us about tariffs? Do they outline them on the website? No, Donald Trump would not have that, so Amazon won't do it. Let's get back to, I should say, Nadia Lovell of UBS Global Wealth Management. She's here on set with us. I was listening to Tom Keene on Bloomberg Surveillance, so I did a Tom Keene thing and dug through your bio, math and physics at Smith, MBA from Stern, and then I saw that you kind of cut your teeth on a fixed income desk, and I wanted to ask, what's your thought on the Fed? Because we've been watching Jerome Powell this week. There's been talk of a shadow Fed. We may see less independence from the next leader. A couple of board members have already been flipped by Trump, it seems. So,
auditioning, yes.
Yes. What do you think about the effect on equities? Is it as immediate as, I think fixed income discounts out much further, right?
Yeah, Fed independence is important. We saw a few weeks ago, obviously, the bond market didn't like when the president was threatening to fire Powell. Of course, the Supreme Court has stepped in to say you can't really do that. So it's important to maintain that independence for our overall capital markets when you think about it. So we think that remains important. If you sort of see any lean into potential of the Fed becoming more politicized, it probably means that rates are going to go higher on the long end of the curve. And also that is going to have implications for equity market valuations, right? Which, as we talked about earlier, is pretty extended. I mean, right now we think that the Fed is going to stick to their guns. There's several more Fed meetings before Powell actually steps down as chair. We're not looking for a rate cut in July. We're looking for the next rate cut to start in September. But again, this is going to be data dependent. It's going to be a wait and see mode. A lot is going to depend on what happens in the labor market. So we'll all be watching next week. There are some signs of weakness in the labor market, of course, when we're seeing continuing claims continue to pick up. And so we're looking for about 100 basis points of cuts for this year.
Well, this year,
yes,
because there's not much left in this year.
That's a lot.
Yeah.
When you think about it, right? So that will be September, and then every meeting for the rest of the year, practically, you expect to see 25 basis points of cut. Now, reality is inflation data, like so far this year, has been pretty well behaved and on pace to target, but there has to be a pickup around tariffs. Now, if you think about it, when you look at the S&P for core PCE, the Fed is sort of, expected a pickup in that 60 basis points so far this year, but yet still maintaining that 50 basis points of cut. And the fact is that they have an unemployment rate at 4.5%. We're not that far from that, is my point. And so it doesn't take much to get to that. And that's why now the labor market is back in the driver's seat. It's an indication that the Fed is willing to look through the temporary pickup in inflation from tariffs. And so you can get very quickly to 100 basis points if you think about what's happening in the labor market. That is starting to see some signs of slowdown. And so we'll see what comes in on payroll next week.
Yeah, fair point there, that it doesn't take much to get to 100. I want to go back to what you were saying about the politicization of the Fed, because there was reporting out this week that President Trump is thinking about naming his next Fed chair or his pick for the next Fed chair earlier than anticipated, maybe in the coming months or so. And you've seen traders in the market start to price in heavy easing come next May when a new chair would come into the Fed. And again, I hear what you're saying about politicization, but that looks like a pretty good bet. It seems like, you think about what is going to possibly happen, who he would like to have in the seat, and probably it's going to be a dovish person.
Now, when you think, it's about the data, right? So optics is important here as well. Reality is, if you had inflation that was starting to move back towards target before this tariff, right? Remember, tariff is a one-time thing, right? And so if you can get through the tariff, the pick up inflation from tariff this year, and next year we sort of get back to on that path towards that 2% target, then the cuts can be justified for next year. And it doesn't have to be a political thing, right? And we are looking for a slowdown in economic growth later this year. And the question is, does that translate into 2026 as well? So the data itself could justify cuts next year. So I wouldn't say that any cuts that come next year has to do with politics. I think the Fed is on the path back to cutting as we get later this year and into next year.
All right, Nadia, great to speak with you on this Friday. Really appreciate your time. That is Nadia Lovell of UBS Global Wealth Management, talking about rate cuts through the rest of this year and potentially next year. But let's talk about today, and let's talk about this equity market, because we are on record watch for the S&P 500. You take a look at the setup right now. If we close at these levels, it will be a fresh all-time high for the big benchmark. Here's the setup. You can see that we have nearly 300 names in the green when it comes to the S&P 500. It's the names that you would like to see two, the big ones, Amazon, Nvidia, Apple, Meta, Nike, too, getting in there as well, pushing this market higher. On the downside, though, you do have some heavy hitters. Palantir up top, that has been a recent winner. Not today, though, down about 3%. Tesla, JP Morgan, and Uber also moving to the downside. So a push and a pull here. Let's take a look at the sector level as well. You can see that we're looking over the past 5 days because blissfully it is a Friday, and it's been a pretty good week when you take a look at the breadth on this market. Communication services has been in charge. We know a lot of that could be Amazon, but tech not too far behind. Consumer discretionaries and financials also catching a bid in this week. You take a look at what hasn't done too well. Consumer staples, real estate, and energy. We've been keeping such a close eye on energy, Matt Miller, with what's going on in the Middle East. And you can see really a lot of that bid that went into the energy stocks had come out this week. Energy down by about 3.4%.
Yeah, it's been an incredible U-turn to watch. And then to see this complacency at the end of the week is pretty amazing. Coming up, we're going to talk about Amtrak, its plans to improve, including next-gen Acellas and a Mardi Gras service to the Big Easy. Can they do that if this Trump administration drastically reduces the amount of money it invests in this kind of transportation? This is Open Interest. After achieving records in both ridership and revenue, Amtrak is ready to invest $4.5 billion in some major upgrades. The problem is the Trump administration has proposed major cuts to subsidies for the Northeast Corridor. So how is that going to affect really Bloomberg clients and viewers who use this product so regularly? Joining us now to talk about that is Amtrak President Roger Harris. Roger, great to have you on. I know everybody in this office and certainly many of our terminal users and Bloomberg television viewers and Bloomberg radio listeners uses your product a ton because we're always going back and forth between Boston and New York and Washington, D.C. It's really important. How will the Trump administration affect what you're able to invest?
Well, thank you, Matt. And first of all, thank you for having us on today to talk about what's going on at Amtrak. As you said, we've had record ridership and revenue in the past year, in fact, in the last few years. And we've really seen that all across the country, not only in the Northeast Corridor, but also in places like Washington State, Oregon, North Carolina, Virginia. Even our new service in the Midwest between Chicago and the Twin Cities carried almost 250,000 customers in its first year. But specifically about the Northeast Corridor, our capital spending has increased between 2019 and this year from $800 million to $4.5 billion. And really, this is not so much a question of less money for the NEC. It's a change in the sources of funding for the projects that we're building. So traditionally, a lot of the Northeast Corridor investment was funded from the operating earnings on the service. And during COVID, Congress appropriated more money for the Northeast Corridor to help underwrite the operating losses that occurred then. And what we're seeing now in the FY26 budget is really kind of a return to what the normal balance is between operating earnings, funding some of the capital work on the Northeast Corridor,
right,
versus our annual appropriation.
Well, talk to us a little bit more about how you're going to make up for that. I hear what you're saying, that we're just going back to maybe pre-COVID levels when it comes to, the subsidies for the Northeast Corridor. But even still, where do you plan to find the funding sources to make up for that going away, basically?
Well, I think there are two ways to think about this. One is what I said, which is the increase in operating earnings. So that's, hundreds of millions of dollars a year that goes towards these projects. But the other thing to think about is that the split in our appropriation from Congress that talks about the Northeast Corridor versus the national network isn't about where the assets exist so much as it is the types of trains. So there are trains in the national network that come from states like Pennsylvania and Virginia that operate on the Northeast Corridor, and the operation of those trains contribute the funding in that appropriation contributes to the reinvestment on these assets. So it's not quite a perfect alignment between which account the assets are funded from and where the trains are operated.
There seem to be a lot of projects that Bloomberg's reporters here are focused on. We got some brilliant questions from Ted Mann, so shout out and thank you to him. The Frederick Douglass Tunnel in Baltimore is one that the Republicans are making a lot of noise about, potentially changing that project. Is that going to go through? The Susquehanna Bridge in Maryland needs to be replaced. The Connecticut River Bridge. Are all of these projects that we're so focused on going to continue to be funded?
Yes. One of the things, Matt, that's going on is we're working with the administration and trying to understand where there's a lot of common ground on these projects, because it's been made really clear to me and to the other members of Amtrak management that the administration is really interested in us running an efficient, reliable service and building great infrastructure. So you mentioned the Connecticut River Bridge, which we're building up near Old Saybrook in Connecticut. Just a few weeks ago, we got the grant for funding that project obligated by the administration, and they were very clear on the fact that they want to get that built. We continue to talk to them about the Frederick Douglass Tunnel, and we're working on ways to reduce the total project cost. And we've come up with a lot of good ideas, and we're working through them with them. We also had a project in Newark, New Jersey, the Dock Bridge, where we came up with some great ideas on how to reduce the total cost of the project, and we got a good shout out from the administration. So I would say that the challenge here is finding out where the common ground is, and there's a lot of that, there really is, and getting the projects built.
Last month I made the mistake of trying to take a plane when I needed to travel to Virginia. It ended in tears and pretty much a lost weekend. And the next week, I was smart enough to take the train instead. It's a far better way to travel when you don't want to sit in the airport for 9 hours and then find out that your flight is finally canceled. Are you able to take advantage of the chaos that U.S. airlines cause in travel, because it's just so much easier and more reliable to take the train?
Yeah, absolutely, Matt. We look at the amount of traffic that we compete with the airlines on, and that's not really our primary focus.
Okay,
we want to get people out of their cars, but what we want to make sure we do is that we have a reliable service and that we communicate with our customers. We have great new Acela trains. I don't know if you want to talk about that right this minute, but we have brand new Acelas that we are, in the final steps of getting approved. I think you heard that from us before, but we are extremely close now. Got the final approvals from the Federal Road Administration earlier this week. And, that's one more step in improving the reliability and the comfort of the product for the end customer. So right. I really see us stepping up our competitiveness with the airlines.
Roger, we have less than a minute here, but I want to talk about that a little bit more, because you compare Amtrak to the airlines. For airlines, I mean, you think about a fully booked first class, in many cases that would subsidize the rest of the plane. Have you considered going ultra high end when it comes to what Amtrak offers on the higher end? Have you considered, modeling luxury train travel in Europe?
Mm-hmm. Well, we've looked at it briefly, but really we see that our core mission is to deliver transportation to the American people. We're probably not the best people to be delivering that kind of very bespoke, very sort of limited product. We want to make sure that we focus the benefits of the money that the government invests in us in touching as many potential customers as possible.
All right, Roger, really appreciate your time. That is Amtrak President Roger Harris, and this is Open Interest. Well, today is the annual Russell Reconstitution Day. After the market close, FTSE Russell will rebalance its indexes, adding the likes of Brookfield Asset Management and On Holding to its large cap Russell 1000 index. Trading volumes are expected to surge at the close, given that funds with trillions of dollars track Russell indexes. Let's discuss more with Catherine Yoshimoto. She is Director of Product Management at FTSE Russell. Great to have you with us. Last year on the annual Reconstitution, we saw record trading volume. Should we expect the same this day?
I think the street is predicting roughly the same amount as last year. It's hard to say until we actually get to the close. We are keeping a close eye on it, but again, largely expected to be similar to last year.
Let's talk a little bit about some of the changes that are being made. You know, I mentioned that you have Brookfield, you have On Holding added to the Russell 1000. And it's interesting. It seems like you have a lot of names that are graduating up from your smaller cap indices to the large cap grouping.
Yeah, absolutely. And this is typical of any reconstitution. We see graduations from the Russell 2000 to the Russell 1000 as the companies get bigger, but also companies from the Russell 1000 dropping down. We do have a band in place to make sure we're not, causing unnecessary turnover due to small changes around the break point. Between the Russell 1000 and Russell 2000, the break points held steady, roughly at 4.6 billion compared to last year. It's around the same. What is interesting is we saw the biggest names continue to get bigger. Apple regained its #1 position as the largest company as of this year's rank day, which was April 30. But we did also see smaller companies entering the index toward the bottom of the Russell 2000. So there is a interesting divergence of company sizes, but this is actually fairly normal in terms of our Russell reconstitution and why we regularly reconstitute the indexes.
I'm curious what you do from like an investor relations perspective to minimize the volatility of these reconstitutions and rebalancings, because it does seem like we've seen less and less volatile moves, and now I know you're moving to semi-annual rebalancing in 2026.
That's correct. So since 1989, we've had an annual reconstitution. Originally, Russell indexes were reconstituted quarterly, then semi-annually, and then this will be our 37th annual reconstitution. That's because investors, index users largely want less turnover. They don't want to see as much change in the benchmarks. Now, I think what is behind, some of the feedback to go to a semi-annual reconstitution from next year, we're going back to twice a year, adding a November reconstitution, is some of these changes that are happening, but also the growing trade volumes at the close of Russell Recon. You alluded to record flows last year, volumes. We did hit a record last year, $220 billion. And the trade at the close of Reconstitution has been above $100 billion for the last 5 years. So, that was one of the primary reasons, actually, from a risk mitigation standpoint. Right. To have a second reconstitution. But we are largely known as a well-telegraphed, transparent index provider in terms of the Russell U.S. indexes. The rules are transparent. We, our rank day was April 30th. We made our preliminary announcements on May 23rd. And so that gives you a long lead time for the markets to prepare for the event that's happening today, June 27th at the close. So about a month, right?
All right,
Catherine. That gives stability.
Got to leave it there. Really appreciate your time. That is Catherine Yoshimoto of FTSE Russell. And tune into ETF IQ on Mondays at 12 p.m. New York time. And just as importantly, you can read all about the ETF industry in my weekly newsletter. That is Bloomberg.com/ETF IQ newsletter, Matt Miller.
What a fun hour.
Yeah, that was fun.
Yeah, I hope we get Roger Harris back again, because I didn't realize how interested I was personally in Amtrak.
That is the best kind of interview to do.
And I feel like the whole newsroom kind of chimed in as well.
Yeah.
Everybody cares about taking the train. Coming up in the next hour, everybody cares about Kate Moore. We have her on as well, Citi Wealth Chief Investment Officer, why she thinks markets are not priced for evolving tariff. We are 30 minutes into the trading day and just barreled straight through the intraday all-time record high on the S&P 500. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Sonali Basak. We've been waiting for that record high, haven't we? And it looks broad-based. We have a very calm set of trades in the market, broad-based rally, and of course, a lot of news from the administration that includes trade progress. The U.S. and China agree to a framework. Treasury Secretary Scott Bessent says the administration's trade push could wrap by Labor Day.
Citi's Kate Moore joins us as the record highs are reached here. She says U.S. large caps are the best house on the block, and well, what a day to talk about that.
And what a day to sit next to you. The need for speed. Legendary producer Jerry Bruckheimer shares his secrets behind his new blockbuster, F1, the movie.
Yeah, I'm excited to. I'm going to see F1. I'm going to see the matinee show this afternoon at the IMAX with our entire production team.
Well,
and you're ditching us.
Well, I hope y'all turn into Real Yield at 12 o'clock, because that's what I'll be missing for you. Anyways.
Sonali has to stay at work. But you know what? Let's talk about the main story of the day. And it really was news that broke yesterday on Balance of Power. We have a trade deal with China. Howard Lutnick told that to Joe Matthew and Kayleigh Lyons. Now China has confirmed the framework. But listen to what Howard said yesterday.
So the China deal, we inked the deal. You remember we had a trip to Geneva, and then that was being slow played. We got back together in London, and that deal was signed and sealed 2 days ago.
Meanwhile, Treasury Secretary Scott Bessent says the Trump administration's agenda for trade agreements could be wrapped by Labor Day. For the latest, we are joined by Bloomberg Washington correspondent Tyler Kendall. How does the summer go along? I mean, between the trade agreements and between the big, beautiful bill, outline here how the administration is hustling to get it all done.
Yeah, hey, Sonali. So officials have repeatedly told us that once they get through that self-imposed July 4th deadline to pass the big, beautiful bill, then the attention will focus back to trying to show that they have made progress when it comes to these trade deals. Now, as you mentioned, we heard from the Treasury Secretary Scott Bessent earlier today, who says that there could be a push to wrap up everything by Labor Day, but a lot still needs to get done here. You mentioned at the top, of course, the leading story that Howard Lutnick had confirmed on Bloomberg TV yesterday, that they had inked the agreement that they reached in London. But we have to keep in mind that was really the agreement over those export controls about rare earth minerals, and then the U.S. loosening their own export curbs that they put into place to try to get Beijing to the table. But that doesn't mean that we have a more finalized deal. That's going to take many more months. And Sonali and Matt, it does seem like we are in for perhaps a few more months here, too, with some other trading allies. Perhaps we could get some framework agreements on the books earlier. But at the end of the day, at this point, we haven't seen much movement towards a more broader, long-lasting term with any of these remaining allies.
Tyler, your team brought us an incredible episode of Balance of Power yesterday, in which not only Howard Lutnick broke this incredible news, but, I mean, maybe it was the earlier edition when I learned about how the Senate parliamentarian actually only advises the chair on rule changes, and then the chair can either decide to accept or not, and it would take 60 votes to overrule the chair. So while Tommy Tuberville is blaming the woke parliamentarian, it's really the chair that decides whether or not to push this legislation through or hold it back, right?
That is correct, and I'm glad that you were able to get wonky with us on Balance of Power, because that is what we really focused on yesterday. But we have to keep in mind that even if this is more of a recommendation, we haven't really seen much indications that leadership would actually go against the ruling. They want to make sure that this reconciliation package does abide by those rules, because they chose to do this on this fast track way, essentially. So that means that all of these provisions have to maintain to those budgetary matters in order to meet that threshold of being approved. Now, one of the big ones that we learned about yesterday had to do with that Medicaid provision, and that didn't appear to pass muster with the parliamentarian. So we are expecting perhaps some rewrites here so that they could still get those priorities through, but perhaps in a way that would make everybody get on the same page.
All right, Tyler, thanks very much. Tyler Kendall there in Washington, D.C. Joining us now is Kate Moore, Chief Investment Officer at Citi Wealth. And Kate, As we hit a new record, it's interesting to see these like left tail risks highlighted on balance of power. But the market does not seem to care. Why are tariffs or, the potential failure of this big, beautiful bill not being discounted in stock prices?
I don't know, Matt. I find it a little frustrating that we're having not enough conversations about what some of the risks may be. Now, to be clear, I think you know me for a long time. I love a good U.S. equity. That said, I think we need to be balanced about what might happen in the second half of this year and into 2026. And then first and foremost, note that the economy was slowing ahead of any of these tariff announcements in April, that consumer confidence was a little shook even before the tariff announcements, that we've seen a more concentration in terms of where corporate spending was coming from, particularly more on the tech and communication side. And so, while the market is rejoicing at small incremental headlines, I think we need to recognize that the earnings growth that we saw last year is unlikely to be achieved. And these macro and policy headwinds are very much going to be in place over the next few quarters.
Do you love, Kate, a good U.S. bond? Because if you look at the 2-year over the last week, it is more than 15 basis points now lower than where we ended last week. And the 10-year also looks a lot lower.
4.25.
It's pretty incredible. Yeah. What do you think, Kate? Yeah. Do you think this makes sense?
Look, I find some of the movements in the market, not just on the equity side, but also, of course, on the bond side, a little confusing. Some of things are outsized relative to the news flow. Look, in fixed income, like a lot of asset allocators around the street, we've stayed very centered and very focused on shorter duration exposures. We think that there's room for extending duration at another time, but we just haven't lined up all of the macro and policy factors that we need. And frankly, so much of this is going to hinge around the tax bill. There are lots of moving parts. I feel like I can't be an expert on it because there are so many discussions and debates happening in real time. But I do recognize that, we see more international investors step away from U.S. assets a little bit. At the same time, the deficit question is front and center. The question around what the dollar real value should be over time. And that, I think, is all going to impact fixed income valuations. So my view is that we need to be a little bit more measured and stay short duration in the near term.
None of this matters to Nvidia as it marches towards a $4 trillion market cap. And you do love a U.S. stock, especially with this kind of heft, right? It seems unstoppable, Kate. How much longer can this last?
Well, I think we need to separate what's going out in the broad U.S. large cap space from the big growers. And the big growers, like some of the tech companies and the AI enablers, I expect to continue to show leadership throughout the balance of this year. Remember when we started 2025 and everyone was so tired of the concentrated leadership that they were making calls for, broadening out? Well, that broadening out didn't make sense with the macro environment. And all of these sort of tech enablers and the AI geared companies are actually showing that they're continuing to up their game. The demand is continuing to be really robust. And as I think I've shared with you before, investment in this space feels existential. Like no company, no industry is going to step away from their tech budget wholesale, even if the macro environment is uncertain, even if they don't know what's going to happen with tariffs, because it is critical for competition within the industry and in future years to be laying the groundwork, building the architecture in tech now. So that is by far and away the place where I expect to see the biggest earnings growth and the biggest price reaction.
Kate, what's the setup? Because Monday, realistically, is the end of the first half of the year. There's a lot of people recalibrating, looking at a new playbook for the rest of the year. You mentioned the tax bill is a big uncertain. From an investor's point of view, what is the biggest fear at this point for the rest of the year?
My biggest fear, frankly, is that some of the weaker confidence that we saw from corporates ends up trickling through to non-tech spending, and that has an impact. I'm also watching really closely the evolution in the labor market. So far, the labor market has been relatively firm, sure, softer than it was perhaps a year ago, but still relatively firm. And companies have been reluctant to make any significant changes to their labor force because they don't know if they are going to have to, cut costs as a result of, higher tariffs, or if they're going to be doing more measures to protect their margins. So we've had a little bit of a paralysis. It hasn't played through that so far, but I do worry that the longer the uncertainty lasts and the longer the confidence stays a little bit weaker, that it will have impacts on some parts of corporate spending, again, ex-tech.
I was talking with Nadia Lovell about this earlier, Kate. There's a lot of talk about a shadow Fed. Certainly, I think Paul Tudor Jones was on with us saying, like, the next Fed chair Trump picks is going to be 100% a yes man, or a woman, but most likely man. Is that as much of a concern to the equity market as it would be to the bond market? Because surely if Powell just capitulated and said, fine, I'll cut rates 200 basis points because the president told me to, the bond market wouldn't see that in a positive light. Does the equity market care?
I think the equity market will care, Matt, and it does have a significant impact, frankly, on small and mid-sized companies, what happens in the rate side. I will also suggest that, if we didn't have this tariff threat, and we know Powell has said this and other members of the FOMC have said this as well, then perhaps their assessment of when it was appropriate to begin easing policy rates would change. So, it's very much on the administration right now to kind of create that clarity, regardless of whether or not they're discussing, potential Fed chairs as early as this fall. I think it's also important to remember that the FOMC is a voting organization and that one person alone can't make changes for policy across the board, that there are plenty of governors and plenty of voters that have strong frameworks that they are going to want to abide by, and it's going to be a process. So I think it creates a lot of noise. It increases the uncertainty factor, frankly, but I would look for the impact of this sort of shadow Fed chair and the guidance there impacting more of the small and mid-sized companies and the large cap.
Certainly going to be a big conversation throughout the summer. Kate, thank you so very much for joining us. Happy Friday to you. That is Kate Moore of Citigroup Wealth. Now coming up, Nike's turnaround builds momentum. It's flying today, Matt. CEO Elliott Hill sees a clear path to recovery ahead. And later this hour, we're going to speak to a legend of the film industry, Jerry Bruckheimer, on the release of his latest blockbuster, F1, the movie.
For this movie, you want to see it on the biggest screen possible. You want to go to IMAX. You want to hear that Dolby sound, that Atmos. It's just so experiential to be part of it. It's a thrill. If you want to go and have a thrill for a night with your wife or your girlfriend or your friends, this is the perfect outing. It's something that's gives you a lift, makes you feel good, takes you away from the chaos in the world for over 2 hours. And that's what we try to do.
Let's get now to high interest. Look at what's making headlines around the world. Iran denies nuclear talks with the U.S. will resume next week. During his news conference from the NATO summit earlier this week, we brought it to you. President Trump said there would be negotiations, but Iran's foreign minister told state television that speculation about new discussions should not be taken seriously. Andrew Cuomo isn't quitting the New York City's mayoral race. Sources telling us here at Bloomberg that he will appear on the ballot in November as an independent candidate despite pressure from donors and advisors to drop out. It comes after Cuomo's stunning defeat at the hands of Queens lawmaker Zohran Mamdani in the first round of the Democratic primary. Michael Bloomberg, we should tell you, the majority owner of the parent company of Bloomberg News, endorsed and contributed to the Cuomo campaign. And U.S. consumer sentiment rose sharply in June to a 4-month high, and inflation expectations improved notably as well. Despite that improvement in sentiment, consumers do remain anxious about the potential impact of tariffs, and their views are still consistent with an economic slowdown and an increase in inflation to come. A little stagflationary impulse is the concern, Sonali.
Yeah, and in those concerns, you're still seeing a market that is ripping. We are back to new record highs. There's a broad-based rally going on. The market is up for the S&P 500 about 0.5%, more so for the NASDAQ 100. Big tech continues to keep powering this rally, but so do consumer stocks. The 10-year yield is down to 4.26. It has lost about 10 basis points on the yield since the end of last week. So still a bid in the bond market. You did see a little bit of a move higher in the yields, both in the short end and the long end earlier today, though. We're going to move back, talk about single stocks moving this hour. We're going to bring in Bloomberg cross-asset reporter Isabel Lee. And one of the things powering the market today is Nike.
Definitely. You see shares higher by around 13%. That's the biggest intraday jump since 2022. So that comes after the company said its year-long slump is starting to ease. So the upbeat earnings calls Thursday night really rekindled enthusiasm about the company's turnaround plan, led under its CEO, Elliott Hill, who, by the way, came out of retirement last October, to really just reverse the missteps of recent years. So Nike expects sales to fall by mid-single digit in the current quarter. That's smaller than expected. Nike didn't issue a guidance for the full fiscal year. Really, again, no surprise because of tariffs and uncertainty. The stock has lost a third of its value in the past 12 months. So this is really a welcome cheer for investors.
By the way, Amazon already worth more than $2 trillion. The number of stocks that are multiple trillions of dollars just continues to grow. And now they've got an upgrade. Is this what you're going to tell us about BNP Paribas?
Yes, they got an upgrade to outperform. BNP Paribas said the company is most likely to meet or beat consensus profit expectations through 2023 when it comes to hyperscalers, that and Microsoft. But we're talking about Amazon. So Amazon is higher by 3%, almost 4% actually, and they're really leading the gains in a magnificent 7%. In contrast, we have Alphabet, which is downgraded to neutral. So in general, BNP Paribas saying that CapEx for the big four hyperscalers are reaching record highs and depreciation to sales ratio are rising by 2030 from 6 to 18%. But still, it's really good news for Amazon. They've really just been getting one good news after the other. But my friends are focused on the wedding this weekend. But that's another topic.
True. In Venice, the Bezos-Sanchez wedding. I believe Tom Keane and Francine Lacroix are flying out this afternoon.
Very cool.
Yeah, staying at the Gritty Palace there.
But back to Amazon for just a second. It's actually now positive on the year, so that's another fun little fact with the rise. You're also looking at Estee Lauder.
Estee Lauder, the stock is rising after HSBC recommended it to buy. So they also increased its price target to $99 from $80. So the stock is up around 3% right now. So HSBC said it sees the cosmetic company at the end of a downgrade cycle. So this comes as hopes of stabilization in China, weakness in U.S. dollar, and really just American resilience coming. We have Evercore upgrading the price target for Estee Lauder. And HSBC also sees the company doubling its earnings between June 2025 to 2027. A lot of my female relatives use Estee Lauder, actually. So I've known it since I was a little girl.
Yeah, well, it's a very popular, it's got to be the most popular makeup brand. And by the way, did you know Estee Lauder is not like some French person that was friends with Coco Chanel?
No.
Estee Lauder was founded in Queens.
Oh, I should know that.
That's a fun fact.
Yeah.
Thank you.
My father made makeup for a living, so I know way too much about Estee Lauder, but I did not know the history.
Yeah.
Isabel, thank you. That is Isabel Lee of Bloomberg News. Thank you very much for joining us. Also, wanted to point out, I'm crazy about the chart that Terrell Holt, our producer, has been sharing. This is Nvidia's historic rise, this idea that they're really only dollars away per share from that $163.94 mark to hit what you've been talking about, the $4 trillion mark. This would make it almost the size of the GDP of Japan, right? This is bigger than most countries.
Yeah, it is obviously gigantic. I remember still the day when Ed Ludlow watched Apple climb above $3 trillion on Bloomberg Tech and announced, Apple has become the first company to cross the $3 trillion mark. And it's something I'll never forget. It's like, landing on the moon and Kennedy. And so when this happens, I hope it's in our show, Sonali.
I hope it's in our show, too. We're pretty close. We're only about less than $7 away, I think.
We were here for the record on the S&P 500.
We were.
Just marching straight through. Yesterday, we were bouncing up against that level. Like, the intraday level is 61.47, and we got to 61.45 and change and came back down. The closing level was 61.44. We pulled back under that for the close at 61.41. So I was a little skeptical that this would happen today so easily, but right at the open, straight through it.
Better than watching the Knicks. Matt, thank you very much. The drama is so real. And as a programming reminder, as stocks hit records, you can watch Bullish on Bloomberg.com and Bloomberg Television. New episodes come out Tuesdays at 6 p.m. New York time on Bloomberg Television and 8 p.m. on Bloomberg Originals. We're going to bring you a sneak peek later this hour.
Turns out the name was perfect.
Perfect timing. This is Open Interest.
Breaking news here. The Supreme Court is allowing President Trump to take steps towards restricting automatic birthright citizenship. The justices at the Supreme Court held out the possibility that lower courts may again thwart him in that fight, but they are kicking the case back down to lower courts to let the judges revisit whether to again block the rules in challenges pressed by a group of states. Bloomberg Washington correspondent Tyler Kendall is standing by. So, Tyler, this is probably the major case that everyone has been watching for, this and immigration, obviously. And in both cases, it looks like the Trump administration takes partial victories, at least.
Yeah, a partial victory, and we can give some context to how we got to this point today, which is that President Trump, on his first day in office, signed an executive order limiting birthright citizenship, and that order was put on hold by judges who viewed it as unconstitutional, and that extended to essentially halting that executive order nationwide. Now, the administration had argued that their order complied with the 14th Amendment's citizenship clause, but we should say that this case doesn't really have to do with those merits. Instead, this case really has to do with the ability for a judge to block a law or an executive order going into effect universally. They're known as universal injunctions. They viewed that they would likely exceed the equitable authority that Congress has granted them.
Tyler Kendall in Washington, we thank you very much for coming to us with the breaking news. Stick with us. More markets ahead. This is Bloomberg.
F1, the movie, races into theaters today, backed by a star-studded cast, including Brad Pitt, Damson Idris, Kerry Condon. Produced by seven-time Academy Award winner Jerry Bruckheimer, it is looking to give the summer box office season a speedy start. Joined by my Hot Pursuit co-host, Hannah Elliott, we sat down with Bruckheimer ahead of its release.
Well, I grew up in Detroit, so that's Motor City. So right away, I'm interested in cars to begin with. It's ingrained in my DNA. But that sport is, and I really didn't know much about F1 until I saw Drive to Survive, and it was really Joe Kosinski who came up with the story and came to me after we finished F1. He said we should make this movie about this extraordinary sport. So I think that, as I said, the first call we really made was to Lewis and say, come on in. And one of the prerequisites for the story to get Brad involved, he said, I have to drive. I'm not going to make a movie that's going to be green screen and process. So they took the energy and time to spend 4 months driving these cars.
How much of a problem was his age? You know, because we're seeing these kids driving Formula One that are, I mean, Kimmy's 18 years old, right? So Brad Pitt has to be at least as old as me. He's in the second half of his century. How did you overcome that?
Take a look at him. He doesn't look like it. He looks amazing. He takes care of himself. He worked out. Listen, when he wasn't on the track, he was in the gym working out to make sure he could handle the rigors of this sport. It's so difficult to drive these cars. And, you know, they're in Singapore. It's over 100 degrees. Most will be 120 in those cars. They're exhausted. So Brad and Damson trained off the track, and then they drove. So they were in really good shape by the time we started the movie, so they could handle the brutality of what these cars throw you through. You're going in 5 Gs in some of these corners. But, you know, Toto and Christian, all these team principles really helped us, Fred, Zach, to create a story that's accurate. And we interviewed everybody. I don't know if you've seen the movie, but this whole thing with the socks, where he has 2 mismatched socks, that came from Williams, who told us that one of their drivers came to the track and had 2 mismatched socks, and the first time he ever won a race. So he did that from there on. A lot of them are superstitious. We use that in the movie. This was a great experience for me because we're so lucky. We get dropped into a world we'll never be a part of and live that life, in this instance, for 4 years. And that's what we do for an audience. We drop you into a world, which is F1, which is really exciting, and make you feel what it's really like to be an F1 driver and be part of an F1 team. And that takes you on a journey. This movie is so immersive between the sound, the visuals, but It's always about the emotion. It's not about all the bells and whistles. And you don't have to know anything about driving or know anything about F1 to really enjoy this movie. In fact, most people who come into this film, especially from this country, don't know very little about F1. But by the time they leave, they're interested in the sport. They feel they've had an amazing ride, and because we've transported them into another place, another time, and they feel a part of that experience.
Jerry, obviously, we've had some other great driving and racing films in the past. Of course, Steve McQueen made one or two. Ford versus Ferrari was pretty popular. Were there films that you referred to either as a do this or don't do that when you were creating this film?
I think, Joe and Brad and everybody looked at all those movies and they learned from them. And what's interesting is the technology that they had versus the technology that we have is so different. I mean, our cameras are a third the size of what we use in Top Gun, and we had 6 of those in the cockpit. Now it's even smaller. We had 15 camera positions on our car. You only could use 4 at a time. And it was even harder for our guys to drive than the real drivers because they had 4 cameras staring at them all the time. So they had to look around these cameras while they were driving the movie. We also created a special type of camera that we didn't have at Top Gun, which is a remote control camera, which can pan and move as we're going 180 miles an hour. So we had to build antennas all around the track to be able to use this remote camera. So that adds to the excitement and the thrill of the movie. What we're trying to do is be seamless so you don't realize that we're actually making the movie, that you're following the story, you're excited by it, and then you're in that F1 car with our characters.
And that was Top Gun producer, that was Armageddon producer, that was F1 producer, Jerry Bruckheimer, absolute legend. One of the driving forces behind F1, the movie, has been Mercedes. The automaker supported the film crew with current AMG models and provided F1 team expertise throughout the filming process. We talked on our podcast, Hot Pursuit with Toto Wolff, about that last week. Here with more from Mercedes-Benz is the U.S. Chief Marketing Officer, Melody Lee. Melody, great to have you on the program. Thanks for joining us. I see you're standing in front of a limited edition Apex GP AMG GT63. What does this movie mean to you? What does this movie mean for Mercedes?
Well, look at the sport of F1. It has just exploded in popularity over the last few years. Viewership is up 50 million since 2021. It's a $3.5 billion business today. That's up 91% in the last 8 years. That just means with this surging fandom of this sport, Mercedes has an opportunity to capture that excitement and bring it back to this brand and bring it back to the heritage of Mercedes-Benz, which has been in motorsport for 130 years of its 140 years of existence.
Melody, you think about Drive to Survive and the audiences that it brought into F1. What do you think that the movie can do and therefore also bring greater audiences and interest to Mercedes?
Having seen the movie just 2 days ago on Wednesday, I'll try not to give out any spoilers, but it truly is an exciting movie for the summer. But it's even more exciting because I truly do believe it's going to expand the audience and the worldwide fandom of the sport. One of the things that the movie does extremely well is it brings people into a sport that they may not even fully understand. Even as someone who's somewhat immersed in the sport, I learned a lot about the intricacies and the excitement that really goes on behind the scenes. So I truly believe this is going to even accelerate further the growth of the sport and the audience that is coming to it.
It's interesting that Mercedes has played such a huge role in Formula One. We talked, as I said, with Toto Wolff about advising on this movie, about Lewis, who obviously now races for Ferrari, but spent such a long time winning championships for Mercedes. Do you still think it's win on Sunday, sell on Monday? Does that kind of thing still exist, Melody?
If only it was that quick, that would be wonderful for those of us who have a tax to sell cars. But in any case, the allure of the track, the technologies that come from the track that then find their way into our production vehicles, that is the truth today. I mean, if you look at our C63 today, it has the hybrid F1 technology that came right off that track. So this is an R&D opportunity. This is a marketing and buzz opportunity. I really think it drives so much of the excitement of the brand. It plays to the heritage and what makes us special at Mercedes-Benz with Mercedes-AMG. Behind me, you can see the model year 26 Mercedes-AMG GT63 Apex GP edition. We have only 52 units of this that are going to go out there for sale. It's one of the rarest special editions we've ever had. But this is our tribute not only to the movie, but to the sport and to our heritage of motorsport at Mercedes-Benz.
You know, back to the audience question as well. We were kind of talking on the side about how I was a Bond girl, love watching James Bond. It got me more into cars. And I'm wondering if you see when you're expanding audiences through supporting a movie like this, whether you're seeing more young people, whether you're seeing more women and different types of people gain interest in cars, let alone Mercedes luxury vehicles as well.
Today, Sonali, the audience for F1 is 41% women, but one of the most interesting statistics that we see right now is that the fastest growing segment of the audience is women aged 16 to 24. So not only is it female, it's very young females. And if you talk to the Gen Zers in your life, like the ones in my household, they say that probably the most chatter and buzz is coming from young Gen Z women. So this is not just an opportunity to bring more people in general to the sport and to the Mercedes-Benz and Mercedes-AMG brand. It's also to expand to new audiences in the next generation that we need to get to sell their cars.
Melody, thanks very much. Great having you on the program. Hope to get you here in the studio soon. Melody Lee there of Mercedes-Benz USA. Now, my hot pursuit podcast co-host Hannah Elliott, who also happens to know a lot more about F1 than I do, joins us now. Hannah, great to have you on the program. I want to ask what you think about this movie. You and I have done a lot of reporting around it, but I haven't seen it, and you have.
Matt, the headline is, I loved it, and I think you will too. And I was very relieved as a F1 fan and reporter to like it. I think this film captured racing in a way that we have not seen before by far. And for people who aren't as involved in F1, I predict you will come out of the film wanting to be involved in Formula One. It was really, really good.
What do you think about we went to Le Mans together last week, the 24-hour race, and we've been getting deeper and deeper into the World Endurance Championship, and they kind of want to take some of that magic that has made F1 so popular and build on it. What do you think about the growth of motorsport in, well, globally, I guess?
Well, we are at, I'm not going to say the apex yet, and that is a reference to the film because the team is called Apex GP, but we're really on an upswing. What I loved about F1, the movie, is it talks about the present and future of the sport. I feel like other racing movies we've seen lately sort of talk about things that have happened in the past, and they do seem a little bit irrelevant or out of date. F1, the movie, talks about like now and the future, and it feels really relevant. It reflects a growing diversity of people involved in the sport, young people, older people, all different kinds of people. And I think that actually represents where we are with motorsport. To answer your question, we are at a very exciting time. It's exploding. And if you talk to executives like we did at Le Mans, if you talk to fans, if you talk to marketers like you just spoke with Melody Lee at Mercedes, everyone's excited. Everyone is finally getting what the sport is and actually what it can be, which is really exciting and huge.
And it seems a great way to sell cars as well. Hannah, thanks so much for joining us. Bloomberg Pursuit's Hannah Elliott. Be sure to tune in to our weekly podcast. It is called Hot Pursuit. And this week, we will give you the rest of that Bruckheimer interview. Plus, we spoke with Tony Roma, who made the Cadillac CT5V Blackwing and is now in charge of Corvette. So kind of a big deal.
I'm looking forward to the readout, looking forward to the movie myself. But before all of that fun starts on a Friday, there is some breaking news. The EU and the United States are confident that they'll reach a tariff deal by the July deadline. Really interesting. You have both sides saying that they believe they could reach that trade agreement before July 9th. Some more breaking news as well. The Supreme Court is upholding the FCC's $8.6 billion telecom subsidy fund. Remember, this is the annual slate of subsidies that helps cover the cost of telecom services for low-income people, rural residents, schools, libraries. We're now going to bring in Bloomberg Washington correspondent Tyler Kendall to really talk more about what's going on. I will also point out, yes, of course, stocks are moving on the heels of that latest Supreme Court news. But let's start with trade, because this is another win, isn't it, for the administration?
Yeah, definitely, Sonali. And it was interesting. Our Bloomberg News reporting indicates that the EU Commission President Ursula von der Leyen told a closed-door leaders from the European Union that she is confident that they can get a trade deal done. We have to keep in mind the backdrop here that there's a little bit more fire under the EU, considering they could face up to a 50% tariff if a deal is not reached by July 9th. Commerce Secretary Howard Lutnick yesterday told us on Bloomberg TV that he was sort of striking a different tone when it came to the European Union. He also echoed that he was optimistic and that if the EU was one of the last to get a trade deal, that's not because of differences between the negotiators. It's because this is going to be a very complex deal going forward, and that's going to take time to iron out. As you well know, this is going to be a 27-member nation bloc negotiating with the United States, and that means that there's a lot of differences that they have to overcome when it does come to this. So we're watching to see if there is going to be some sort of stronger framework, firmer framework that we are able to see. But we do know that going into this, the EU had said that they were preparing retaliatory tariffs if they weren't able to make a deal, and perhaps that is helping to spur the negotiations forward.
All right, Tyler, thanks very much for joining us. Tyler Kendall there in Washington. I do actually want to follow on the FCC telecom subsidy fund as well, upheld by the Supreme Court, and we're getting a number of rulings, obviously, out by from the Supreme Court today. What can you tell us about that?
Yes, this actually was pretty widely expected. The court back in March had signaled that they were likely going to uphold this federal program from the FCC. It's known as the Universal Service Fund, and it uses about more than $8 billion in fees that are imposed on phone bills to essentially help to subsidize the cost of telecom services for a range of specific communities, including low-income Americans, rural residents, schools, and libraries. And it really is the latest in a series of cases before the Supreme Court that challenges the power of federal agencies. But we should say this is actually a win for the Trump administration, even as we've seen them sort of go after federal agencies in different ways when it comes to job cuts or funding cuts. They were in favor of keeping this program in place. As you mentioned, this is one in a series of cases that we've got in. Today is the last day of the 2024-2025 term for the Supreme Court. Their next term starts on the first Monday in October.
Tyler, we thank you so very much. That is Bloomberg's Tyler Kendall in Washington. I should note that also with all of these wins from the administration this week, the latter end of this week, stocks are not only at a record, they're also near session highs. Stick with us. This is Bloomberg Open Interest.
Time for this Friday's Wall Street Week preview. Today we're going to look at the price of citizenship. Yesterday, Howard Lutnick told Balance of Power that the U.S. has 75,000 interested applicants for so-called golden visas, which cost $5 million apiece. That means the U.S. could raise $375 billion of revenue with the program. David Weston has a look.
Kristen Surek is an assistant professor at the London School of Economics, where she has studied what is known as investment immigration. The revived push in the U.S. parallels other countries experimenting with golden visas and passports.
They're actually much more common than most people think. So if we're thinking about the golden passport program, so citizenship, there's over 20 countries with legal provisions that enable this, and there's about a dozen that regularly approve people through their programs. For thinking about the residents, the golden visa programs, they're all over the place. You can find them in just about 60 countries, 5 territories, even in places like the US and half of the EU member states.
The programs vary according to how much money is required, whether it's an investment in the country and what kind of investment, or just a fee paid to the government? And, by the way, whether the immigrant only gets to reside in the country or actually becomes a citizen.
Golden passports are sometimes also known as citizenship by investment. So these are programs where you donate to a government or invest in a country, and in pretty short order, and sometimes without even ever going to the country, you become a citizen. It's a little bit different to a golden visa program, where you get not citizenship in the country, but residence in the country.
Whatever form these programs take, the goal is always the same: growing the economy of the host country. And the smaller the country, the more of a difference they can make. Investment immigration programs account for up to half of the GDP of the island nations of Dominica, St. Kitts, and St. Lucia.
So usually the idea is to bring investments into the country. Now, if we're talking about very, very small states, and usually they're the ones who are doing the citizenship programs, the amount of money that a government can bring in through these programs can be absolutely enormous. So some countries see well over 30% of GDP coming in through these programs. Now, if you're thinking about the golden visa programs where you're just getting residence, we're often talking about much bigger economies. In terms of what countries get out of it, we'll be more targeted if we're looking at those investments.
But that's where the math doesn't always add up. One immigrant's investing can be one local citizen's crowding out, as in real estate. Take Spain, for example.
We've seen Spain shut its program down, Ireland shut its program down, the UK shut its program down. If you're only approving a couple hundred, people per year, a couple hundred applications per year, is it really worth it to keep on the books, given the potential risks involved?
And that was our own David Weston on golden visas. And you can catch Wall Street Week every Friday at 6 p.m. New York time. Don't miss it. This is Bloomberg.
I think why it's interesting for me as a hedge fund manager is that there are times when there's an event, like how bad will the tariffs get, a market on that. Will there be a recession? What will the price of oil be if there's an attack on the Iranian nuclear facilities? Will there be an attack? What's the probability of that? Well, we don't set the strike of oil. And I think those products, those markets can be used in conjunction with traditional markets, oil, stocks, bonds, for us as arbitrageurs to be able to lock in those unknowns, and we can make much safer, bigger investments. I'm just fascinated, and I'm trying to find ways so that in the near term we can use prediction markets for our investors directly, not just as a guide point. So, chance of recession. There is a 50% chance of recession in the prediction markets right now. But I can calculate chance of recession in credit spreads, even after this recent widening, is still under 50. Is there a trade to do? Now I can hedge myself if I use Kalshi or Polymarket or whatever it may be.
That was part of my conversation with Saba Capital's Boaz Weinstein from April, where he was talking about prediction markets. You can watch the episode on Bloomberg.com and on Bloomberg Television. New episodes on Tuesdays at 6 p.m. New York time on Bloomberg Television. And it's interesting, he's talking about prediction markets. You could use WSL Predict Go on the terminal to get there, and they're dovetailing sometimes with real markets.
Yeah, and congratulations, by the way.
Oh, thank you.
What a fantastic show. What an amazing rollout.
Thank you.
There was a fantastic party last night in the East Village. I haven't been in the East Village since I was like 24.
It was fun to take you out, honestly.
It was a lot of fun. It was a lot of fun. And some luminaries, really. You can watch this on Amazon Prime.
You can watch it on Amazon Prime. It streams there, and of course on Bloomberg.com. But a long week and ahead for a short week. Stick with us. We'll be back with you on Monday after this record high was hit today. This is Bloomberg Open Interest.